Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing, a channel that is dedicated in investing and personal finance. The CPI report we're going to get this month, tomorrow, might be the most important CPI report we have gotten in the last 2 years. I'm not joking, I'm serious. This CPI report is going to be huge. Now, the initial reaction might not be that volatile. We might not see a huge reaction to the upside or downside. It doesn't really matter. That's not what matters here. What matters is the situation that the Federal Reserve is currently in and what this month's data will do with the overall narrative, and if they can continue to raise rates, if they need to, or if they don't, and we still see strong inflation. Because at the end of the day, we are dealing with two things now. We are dealing with a battle against inflation, and we are close to a banking crisis. As you saw with Silicon Valley Bank, Signature Bank, First Republic, and a lot of regional banks under extreme stress right now, with the FDIC having to come in and cover all deposits in those banks that have failed. There's only so much money in the FDIC, around $125 billion. So if you get 5, 6 banks to fail, that money is going to be wiped out. And any bailout after that is going to be most likely covered by taxpayers, which we do not want. On the other side of that, we have inflation. Last month's data showed an uptick in inflation. That uptick is not welcomed right now in this market. With the Fed still being hawkish, trying to tackle inflation, they are now battling with a potential banking crisis. So, how hawkish can they really be? If they take their foot off of the brakes and they stop raising rates while we still see rising inflation, that's going to be really bad for equities. If they continue to break the economy by raising rates and we head into a financial crisis, that's obviously not good for the market as well. So we're stuck between a rock and a hard place right now. It's a really difficult climate to invest in, and it is going to be rough for the foreseeable future, at least in my personal opinion. Now, the CPI report is extremely important because if we see an increase in inflation in this month's report, that means that we now have 2 months straight back to back where inflation has continued to increase. If the Federal Reserve has to then continue increasing rates, the market is going to be spooked about a potential recession. They're going to be saying that the Federal Reserve is going too that the Federal Reserve is too hawkish. They're overdoing it. The CPI is a lagging indicator. They're not looking at leading indicators. Inflation is not a problem. Their main concern should be a recession. If inflation does, if this report is somewhat moderate, the Federal Reserve can still continue to raise rates because that is their priority number one from what we have been told. That also won't look really good for the market because the same narrative. They're going too far with their rate hikes and we need to be worried about a recession. That's at least what the bond market is pricing in. If this month's CPI report is somewhat moderate and the Federal Reserve doesn't raise rates, that's probably the best scenario for the overall market. But we're still dealing with a lot of uncertainties, so the upside is still very limited in my personal opinion. An alternative scenario, which wouldn't be good for the markets as well, is if we see an uptick in inflation and the Federal Reserve does not raise rates because they're too concerned about the banking crisis and a financial crisis. Then we're dealing with a Federal Reserve that's willing to let inflation go up a little bit higher to stay higher for longer and is not so concerned about inflation anymore. And their main priority is the stability of the financial markets, which would be even more concerning in my personal opinion. So upcoming, we have CPI tomorrow, and then after that, we're going to have a decision from the Federal Reserve on their rate hikes. All that's going to be super important, and any talks from Jerome Powell and other Fed members is also going to be really important because right now we're kind of at a crossroads and we need more information and more from the Federal Reserve on which direction they're going to take us because it's extremely important. So there are three main things I think you should be following right now to try to better understand the situation and maybe get some more insight on the direction that the Federal Reserve is going to go. I want you to watch the bond market. I want you to look at the 2-year treasury and the 10-year treasury. If yields continue to fall, then the bond market is saying that the Federal Reserve is going to at least pause and potentially pivot this year. I want you to take a look at high yielding junk bonds. You can look at the HYG ETF. If that continues to fall, then that means that there is concerns about a recession and junk bonds are starting to fall as well. That means that investors are willing to take on less risk because they think a recession is on its way. And another thing you can look at is major technical levels on the S&P 500. The most obvious one is the 200-day moving average. Is it going to be resistance on any retest of that level? Another one would be the prior low. Do we continue lower and set lower lows and retest the lows that we saw back in October of last year? Key levels on the S&P 500 will be a good way to gauge momentum and see what the market is saying about the overall market. Now that pretty much wraps it up for this video. I thank you so much for your time. If you like this video and investing content, then please consider hitting that subscribe button and giving this video a like. And also you can join the Patreon, only $5 a month just to keep out scanners. That will give you access to a private Discord server where we talk stocks and investing every single day. You have live trade alerts, a community of like-minded individuals and resources, many investing books, and PDFs for you to view and read so you can increase your knowledge in the overall market. This is We Are Investing, and together we are invincible. See ya.